Hello, and welcome to this edition of the Modern Investor Journey. My name is Rod Hurd. I'm co-founder and CEO of SmartBe Wealth, and I'm here with my partner, Art Johnson, co-founder and portfolio manager. And today we're delighted to have with us Dr. Alfred Lahar. He's Associate Professor of Finance at the Haskayne School of Business. He did his PhD at the University of Vienna, and prior to moving to the Haskayne School, he was working at the University of Vienna and then had a short stint at UBC. We're really excited to talk to Alfred because he's an expert in Bitcoin, smart contracts, and the pricing and mining of these new markets that are emerging. I think you'll find that we'll have a very interesting conversation that will enlighten a lot of us on what is happening in this sort of cryptocurrency space, as well as the smart contract blockchain aspects. Alfred's widely published and published in a lot of the tier one financial journals, and is one of the University of Calgary's and Haskayne School's shining stars in that area. And most recently, Alfred was awarded a competition. The Bank of Canada had a competition to 20 universities across the country, and they were looking for people to help them understand how the fiat currency group in the Bank of Canada, with the Canadian currency, needs to transition into this digital age. And I'm sure we'll get into that a little bit. So, Alfred, welcome to the show. We're really delighted to have you on.
Thank you so much for having me. It's really great to be on the show.
Yeah, it's. I just want to give a real plug to Alfred because as an economist, a lot of the times you find people who are black or white in their thinking, very linear. And I think Alfred is not that way. And I'm absolutely certain that the way he gravitated to Bitcoin as just a fascination with the thinking and why people do things and all of that, and trying to figure out the puzzle of why this thing is doing what it's doing, but also having the technical background to understand it from the classical economics fashion. So it's fascinating to have you on because of what's going on with Bitcoin, but more importantly, just I love you on because I love the way you think. So that's fantastic.
Thank you so much for your kind words.
I also, Alfred, love the fact that you're a father, and I got to relate this story right away. That Alfred has been at one of SmartBe's conferences in the past and gave a great dissertation on some of his earlier Bitcoin work. But he said that the best investment he's ever made was from his, I think at the time, 5 or 6 year old son who. They were doing an investment club at home, and his son picked Costco out of a group of all of the companies to invest in, and it turns out to be one of his greatest investments. And as you'll learn in the show today, he's now got his daughter into the cryptocurrency world, tokenizing one of her pieces of art and trying to sell it in the ethosphere. So maybe why don't we start there, Alfred? Why don't we talk about your daughter? I think it's on Uniswap. It might be on another platform, but help us understand how that market works and what the space is all about.
Yeah, I was just totally fascinated how, as an example, how blockchain and fintech will change our everyday life. And this was not an area where I initially expected this to happen. So what we did was my daughter loves to draw on her tablet and create these digital art pieces. And so her art up on the interplanetary file system, that's really a thing. It sounds like Star Trek
totally, Spock.
Yeah, but it really exists, and you upload that, then you can mint a token that represents the ownership to that piece of art. So it's a digital token similar to a lot of the other cryptocurrencies that we have, but in this case, there's only one token available, and that represents that ownership. And then you can put up the token for sale at the digital platform. The platform we are using is OpenSea, and so there's a lot of art there. And to my surprise, I read that this is a multi-million-dollar market. So I think in December 2020, I read somewhere that $20 million worth of art was sold digitally. And so
is that since inception, or is that 20 million over the year?
In 1 month.
In 1 month,
just
that's
the month
amazing.
Of December. And it's a tremendously growing area. So that didn't exist half a year ago or a year ago. So that's just a tremendous amount of growth. Now, the exciting part is that this same technology can be used for a lot of other things, like you can digitize invoices, you can digitize containers this way that are shipped across the world's oceans. And this just shows you how this technology has the potential to really change so many things we're doing every day in our life, from art to to container shipping. The underlying technology is there. It works. It's being tested right now. And that one day it will just come and boom, change everything we do.
It sounds like I've got to dust off some of my old Spider-Man drawings. So from when I was 10 to make some side hustle here.
Make some money there. Yeah, that's right.
Can we step back a bit and just we're going to use a lot of words that probably people aren't going to fully understand. A token, even Bitcoin. Can we even go back to the concept, if you can help us here, of this is a libertarian concept to have a fractional reserve banking system. And that's really what we're talking about. And the idea, we had it at one time with the gold standard. And the idea is that it requires no government involvement other than the simple enforcement of contracts. So can you walk us through contracts and just give us a base understanding of what is a token? What is the disruptive technology as you see it?
So I think the big achievement that Bitcoin really showed can exist is that we can create a ledger of who owns what without trust. So usually we have a lot of ledgers in our current economy, like the land registry, or if you go to the bank, it's clear that you have a lot more in your account than I do. And we all trust the bank that the bank keeps track of that. But this is a trusted party. In the land ledger, we trust the government to keep that ledger correct. But with Bitcoin, this is the first system that really achieved to keep a consistent ledger that everybody trusts in without any trusted party. So everybody's kind of a crook on the internet, almost. That's kind of the premise that Bitcoin is built on. But we can still generate this system that allows us to have ownership in a consistent way and to have proper record keeping. And as it turns out, that's really important for the success of Bitcoin. So there's no real economic value, of course, to Bitcoin.
Can you describe the main components, Alfred, from the smart contract to the miners to the encoding? Can you simplify what this world means to maybe a grade 6 or 8 level for us?
A block just consists of a bunch of these ledger entries. So who owns what? So we can write in these blocks that Art gave Alfred 1 Bitcoin. And so that's the kind of information that's in there for the most part. And we can add these blocks. We can add a bunch of these ledger entries to a block, and then we connect these blocks with each other to form a blockchain. Now, what is important here, there's some cryptography that makes these block entries tamper-proof. So if somebody would try to falsify a record entry in the past, then this would be detected through these cryptography mechanisms. And what we often hear in Bitcoin is this process of mining. So what mining really means is that miners select these ledger entries and compile them to a block. Now, the unique thing about how security works on Bitcoin is that creating this block has to be hard. Hard meaning it's computationally expensive. You need a lot of computing power to compile one of these blocks. The reason for this is that this makes it hard for somebody to go back in the past and falsify the ledger. Because if I want to go back and change a ledger entry that was like 50 blocks ago, I have to go back and recompute that block that it's valid. And then I have to recompute all the blocks that came after it. So I have to recompute 50 blocks. And at the moment, this is so computationally expensive that nobody would do that. And so this is why the system is safe. This is why nobody goes back and tries to change the past. This is why the system works. Now, the downside of this is it's kind of bad for the environment because we use a lot of electricity to keep this going. So the Bitcoin system uses about as much electricity as Ireland or Norway or Belgium.
Wow. So computationally expensive. What would the expense of decryptifying one block be? Is that $1 million, $10,000, $1,000? $1?
So I think that's in the if you want to recompute those 50 blocks, you would have to spend millions of dollars to do that. So, and for the most part, that's not worth it, and so people don't do it. And it would just even be at the scale where it's hard to get the resources to do that. That's why there's this mining is just a big industry where a lot of computing power is spent. We have these mining farms where there's racks of computer after computer, and they have specialized computers that are just focused on mining Bitcoin. They cannot do anything else. They're just purposely built to mine Bitcoin blocks. So this is why this is such a big business.
Now, Bitcoin seems to have grabbed the heart and attention of the public because it's a currency and it's going through the roof, and we hear all of the news about it. But my understanding is there's a number of chains out there, a number of blockchains out there that are beyond Bitcoin. Can you tell us what the landscape looks like?
So there's a lot that start up. So the second biggest, and I think the most interesting blockchain at the moment, is Ethereum. So Ethereum differs from Bitcoin in the sense that its main purpose is not to support the cryptocurrency. Its main purpose is to run a decentralized world computer. So on this blockchain, what you can deploy is, instead of just record keeping, what you put in these blocks are little computer programs. And so you can run computer programs there. And these computer programs can do a bunch of things. So first of all, they can generate these tokens that we talked about before. So a token is just some digital piece that I can transfer to somebody else. And there's a record keeping of who owns which token. And so we can use these tokens for many different things. So one example was the ownership to the digital art that we mentioned before. Mm-hmm. Other examples are there is finally this Filecoin coming live. So if you have some extra hard disk space on your computer, you can rent that out. You get paid for that with these Filecoin tokens. And if you want to store something on the internet, you can store it on somebody else's computer also, and you pay with these Filecoin tokens. So we can think about this like a Dropbox, but it's not a central server or a company that's behind it. It's decentralized, so it gets spread out all over the internet. It's encrypted, so you cannot read what other people are storing on your computer, and they cannot read what you're storing. And so it's a safe way to implement something like a decentralized Dropbox.
And that's fascinating to me, Alfred, because I think as someone in finance, where I struggle with Bitcoin is that individuals are comfortable speculating in it and trying to aggressively grow and expand their wealth by investing in it, but not storing wealth in it. What you're talking about is eventually where Bitcoin becomes, or a cryptocurrency becomes, kind of like the de facto currency in a way through these type of systems. Is that what I'm clearly understanding, or am I getting that okay?
Yeah, I think it's kind of a currency. A lot of these tokens are special purpose currencies to buy specific services. Like in this Filecoin, you can only use it to pay for storage, but there is active markets where you can translate these Filecoins to other cryptocurrencies or even fiat currency. Mm-hmm. So I think that is true that these markets will be more like currency-based markets. There's a huge market for stable coins at the moment. So where we have a lot of tokens that represent the value of a US dollar. And so this is a huge market out there that is growing very fast.
I think that's really important because the vast majority of people that are buying Bitcoins are not doing so because Bitcoins remove the hardships associated with conventional money. What these are actually becoming, that's the real disruptive part that I find. It's hard for me to say this in simple terms, but to connect the dots on these things, it's like it's allowing people actually to do different things based on the Bitcoin. And that's what's fascinating.
Yes. So these new Ethereum-based, mostly Ethereum-based tokens offer huge possibilities that otherwise you cannot offer. And this comes with these smart contracts where you can link those currencies or these tokens directly into smart contracts. So a smart contract is just a computer program that does certain things for us. And we see a tremendous growth in these smart contract-based finance. So this is called DeFi, for decentralized finance. And we see a tremendous growth in this market. Many of the protocols there were not around a year ago, and now they have billions of dollars invested in them.
You mentioned that there was a lending platform. I think it's on Uniswap. That's the lending market right now is in the 4 billion USD range, and that there's a crypto token market that on the software side that's $1 billion. And I was fascinated by the fact that this is really, really new. Like, this is not 2 years old even. It's not even 18 months old. Where are these pockets of real commerce happening in the blockchain smart contract world?
Two leading lending platforms are Make and Aave, and between them they have, I'm just looking up the stats today, they have over 12 billion US dollars invested in them.
Wow.
And Aave was not around probably a year ago. So this is tremendous growth. And what is really important here is that these are just kind of, they're testing the waters, they're trying these platforms out. And we will see once this goes mainstream, if we have more stable coins, if we have tokens that are linked to a Canadian dollar, then anybody can also just go to these platforms and take out a loan. The system works. That's being proven today. We see this is already big, but once we see more mainstream assets entering this token world, once we can tokenize more assets, then we will see just this technology being applied to these new tokens, and it will grow tremendously.
And that's the critical point. Bitcoin in itself is just a means to an end. It's like investing in gold. But when you get to borrowing and investing against a crypto, that's where it gets really fascinating.
Yes.
I think the way I've rationalized it in my own mind is there seems to be two universes. There's the cryptocurrency universe, which is a Bitcoin related, trying to replace a fiat currency type of thing. But then there's this other platform, which is the plumbing and infrastructure and code that allows for smart contracts to proliferate with tokens and coins, which has nothing to do with the currency side of things, but rather is intended to remove a lot of friction from traditionally very laborious transactions and has the potential to be massively disruptive. Is that the right mental model, Alfred?
I think that's exactly right. So Bitcoin itself is like investing in gold, and in a way it's stupid. You cannot really do anything with it, right? So it doesn't have any smart
utility,
features, any utility. And in that sense, it's similar to gold. Gold does not have a lot of practical use cases too. These other tokens, this DeFi world is really where the action is going to be. This is where the disruption is going to happen. So there is this token exchange, Uniswap, which is really huge. You can trade tokens against each other. They trade about $1 billion worth of token every day, 7 days a week.
Wow.
And again, this was not around a year ago. So Uniswap was around a little bit longer than that, but it was not around, like, it's probably 2 years old. And I'm just looking, a year ago, it was trading about $11 million, and now it's up to $1 billion. So
huge growth.
This is tremendous growth in this area. And at the moment, you can trade these crypto tokens against each other. But once somebody like JP Morgan or a large bank goes and says, well, we'll take these stocks and we'll issue tokens against these stocks, then you can start trading these stock tokens on Uniswap. And this offers tremendous opportunities there. So if you recently followed this story on GameStop and how a bunch of kids on Reddit hyped up this stock on Robinhood, and were buying the stock, and eventually the frictions of the system became apparent. Robinhood had to stop trading in the stock because it takes 2 days to settle an order in the current system. So if you buy a stock today, you put in a buy order until that order is settled or finalized, it's 2 business days. And Robinhood and other brokers have to put up collateral for these 2 days. And there's such demand in for buying these stocks, and there's so much volatility that they didn't have the collateral to put up to be able to allow users to trade these stocks. So in the smart contract world, settlement is instant, and you don't have to wait for 2 business days for your transactions to settle. It just happens right now. And so this really improves the plumbing of our financial system. And this Robinhood episode really showed where some of the frictions of the plumbing are that we have today. In the financial crisis, we saw the frictions of the plumbing that we have. And so these new platforms really offer an opportunity to improve that and make it much more efficient.
Yeah, the Robinhood is very interesting because really what they ran into was what they do is they lend their stocks out for cash. And at one point, GameStop was 60% of the company. And so the people that were lending the money to them, the bankers, said, I'm not going to take that risk. Whereas in a smart contract, that would be a very different world. It just goes to how, like at a certain point, the regulated risk market comes in there and they make decisions which could impede a business, and that was fascinating to me as well.
Alfred, who are the players right now that are transacting this $1 billion a day? Are they sort of, should we be thinking of dark net hackers in the back room with a hoodie? You mentioned Morgan Stanley mainstream. It's obviously not the mainstream people. It's distributed. It's not the plumbing is not owned by anybody. It's open source. So who are the innovators? Who are the pioneers of these crypto markets?
The Uniswap was started by some guys at a hackathon at some conference, and they just put it up on GitHub, and it's open source, and everybody can use it. And now there is a lot of money invested into this, and a lot of these things are small, new innovative companies that start up. Often they think of themselves as not the main goal is not to monetize this, but to provide a system that is being widely used and adopted. The investors in this space are all over. It's little small investors who buy into this, and there's also a lot of institutional money flowing into this. If you provide liquidity or if you provide tokens for these markets, you can earn yields that are above the yields that you get if you invest in a lot of other asset classes. So this is just an attractive investment opportunities, and the smart pools of money around the world have realized that you can earn 5-6%, 10% yield on providing this liquidity on Uniswap and providing this money that gets lent out on Maker or Aave. So there is returns here, and people chase after these returns. And this is not just little and small investors.
That's the most fascinating part, Alfred, to me, is that you couldn't do that in the cryptocurrencies themselves. When you get into borrowing and storing wealth, that's when the wealth can multiply. And that's the most fascinating part, because that is a new change. That is a fascinating new change.
It offers really new investment opportunities, right? So on Uniswap, for example, this is this token trading platform. This inventory, if somebody comes in and wants to buy some tokens, these tokens have to come from somewhere. So there's an inventory of tokens. So if you want to approach this market and want to buy some wrapped Bitcoin in this market, then these wrapped Bitcoin have to come from somewhere. So there's a liquidity pool that has this inventory. Now, all the people that provide this inventory get a return for the service of providing this liquidity.
You had indicated you're a liquidity provider. So how did that process work?
I have a whole $500 invested in this. Well, if I teach about this to my students, so then I have to do that myself. So so far it has been a very good investment, but we'll see how that goes.
The janitors aren't talking about it yet.
Yeah, well, we're starting to. So, so the way this works is that you have to buy these tokens that you want to provide for is inventory, and then you can give those tokens to Uniswap, and you get a custody token in return. So this is like you go to a code check at the theater, and you hand in your codes, and you get little kind of claim plastic piece in return that in the end of the day you can give the plastic piece back and get your codes back after the performance. So on Uniswap it works similarly. You hand over your tokens to the Uniswap smart contract, and these enter this trading inventory, and then at the end of the day, and whenever you want, you can just go and ask to have these tokens returned. And so then you can hand in your claim slip, and you get whatever part of the inventory back that is there at the time.
So do you earn an interest rate? Is it a predetermined interest rate, or do you get it? Like,
so
how does that
on
work?
Uniswap, everybody who trades on that platform has to pay a 0.3% fee. And so these fees go to the liquidity providers. So if there's more trading, then users can collect more fees on that. Now, of course, if you are providing liquidity, there's a risk always that the market moves against you.
Mm-hmm.
If you're a market maker, so that fee is in part the compensation also for that risk that you are the market maker, and then you sell these tokens to somebody, and then the market moves against you.
If I'm a new entrant, I'm just trying to get this right in my own brain. You've indicated that there's roughly $1 billion a day of liquidity on the Uniswap platform. And let's say I have a grand idea that I want to have $5 billion a day of liquidity. Do I need to come to the marketplace prepared to offer that liquidity with my service, or will the fact that I put the service out organically see people come in and increase that liquidity? Is it a sort of a prescribed necessity to bring liquidity with your business idea, or does the market ebb and flow organically?
The market ebbs and flows organically, and we can see that people who come up with a clever idea are able to attract investors. So you have to design the economics of the protocol right, so that people who provide liquidity get a fair compensation, and the people who trade on this get to pay a reasonable fee for that. There's trading, so the whole economics of designing these platforms can be a little bit tricky, but then you just put the technology out there and people will come and use it. And the great thing about this is that this is works like Lego. So this Uniswap, where you can swap these tokens, is one example. There's the lending platform. These lending platforms, they're also Lego pieces. So you can create your own smart contract that utilizes the services of these other platforms. You don't have to reinvent the wheel of how do we swap tokens against each other. You can just use Uniswap in your own program or in your own platform. You can build on these other existing platforms to build something on top of it. One thing, for example, we could try to do is to look, or what is happening now is to look at credit risk. So at the moment, all the loans that are out there are collateralized. So what could happen is that we separate the credit risk, and I could say, well, somebody, if the borrower defaults, then somebody guarantees for that loan. This way we can give out loans to people who don't have the collateral, say businesses, and somebody else can guarantee for that loan. So that might be that you know this person in the real world, and then say, well, I know that this person is trustworthy, so I secured their loan in this cyber world.
And you'd get paid an interest based on what your knowledge of the risk of the loan is. Yeah, paid a fee. Exactly. Cool.
So would the collateralized debt be better through a smart contract than a rating agency? Is that the real advantage here?
I think these smart contracts offer a lot of credit rating agencies are are hugely biased. We know that they have huge conflicts of interest.
Yeah.
They want their businesses to issue credit ratings, and they want to issue a lot of credit ratings. And of course, they get more businesses if they issue favorable ratings. So there's, in the whole business model, there's an inherent conflict of interest. And we've seen that materialize in the financial crisis. So these smart contracts offer, in a way, a more efficient settlement. They offer a lot of opportunities that otherwise don't exist. So, and using these kind of Lego blocks, I think we can create new platforms, new plumbing that in many ways is better, faster, more global than the existing plumbing that we have.
So is this motivation for you to quit your teaching job and start a smart contract around credit rating?
No, I don't think so. No, I'm still interested mostly in the analysis of this whole market at the moment, and I love my job, so I don't think I'm gonna go there.
People will, for sure. Yeah.
Can we dive into a bit of that? Like, why? I mean, it's new technology, but how does an academic approach an issue like this? What do you look for? What are you trying to understand? Because I think that's something that people don't get in finance a lot, that there's a tremendous amount of academic research on finance, actually trying to answer the basic questions that investors are trying to ask. Why does this work? How does it work? So how do you approach an issue like this? If you can give us some insight into that, would be tremendous.
A lot of stuff that you read in this kind of crypto world is, hey, that's great, we're going to take over the world and the old system is bad. And I don't necessarily think that the old system is totally bad. It has its issues, but the crypto system has its issues too. So, but there's always frictions in every system that humans build. So the question is, how do the frictions compare, and where is one system better than the other system? What kind of old problems do we solve, and do we create any new problems along the way in this crypto world? And so when I look at this is to say, how does this improve the existing system? What can we do better with this technology? What other problems are being created with this technology? And I often think, what if everybody would use this? What problems would we see? And there's many problems that we see. I mean, there's no perfect system, but I think that it will change a lot of stuff that we do today, a lot of the plumbing, a lot of the back office work. So this will create a lot of change.
How much does the availability of high quality data impact what you are able to study?
This is a big challenge, and a big opportunity. So the data and computing power that you need for this is tremendous. So I was talking to our dean, and he thought I added an extra zero to the number when I said, this is kind of the computer I would like to buy, because the kind of computing power that you need to analyze this data is really tremendously. So I'm in my research on Bitcoin, we produce about 300 gigabytes a week on data, and that is just running in the background on some cloud instance that we get through a university research network, but that is approaching the limit.
The cops are coming after you. The data cops are coming after Alfred.
Amazon's knocking on the dean's door.
and this Ethereum data is also huge. I mean, these are billions of transactions, and if you want to do some research on this or analysis on this, you have to go and select very few transactions, 1 million transactions or 10 million transactions out of 10 billion or something like that kind of order of magnitude. And so this has to be really fast. You need really fast and powerful computers to take a look at this data. And so this is certainly a challenge. And the data is growing a lot every week. And so this just gets bigger and bigger. So you really need to throw some serious computing power at this to analyze the data.
And I think that's the main difference that people don't understand. If you're listening to some blog poster, there's a whole different deal when an academic is doing research. They're pouring through massive amounts of data.
It's rigor
that an average person would never get access to. They may arrive at the same answer, but exactly like you said, Rod, the rigor of the analysis is fantastically better.
And then the peer review process after that, everybody's throwing buns at your work to make sure that the data was accurate, that the math you used was correct, that the sample size wasn't biased. All of that stuff is just, it elevates the trust or the standard of, and you know, the fact that Alfred gets published in these top finance magazines that gives the world faith that other super smart people with bigger computers, because they come from wealthier schools or whatever it is, have looked at your rigor. I'd like to change gears just a little bit, Alfred. Help us understand this competition and your work with the Bank of Canada, because I think the Bank of Canada stuff is really important to us as a nation and to everybody who's wondering about fiat currency. And if you haven't heard of the term fiat currency, all it means is a country's currency, like the USD, like the Canadian dollar, where a central bank controls the amount of money that you have. They can produce money, they can reduce money. That's the traditional fiat currency model, where these crypto platforms now are, with Bitcoin as the primary example, forcing central banks and the other banks of the world to try and think, how do we evolve into this space? So if you could just tell us a story about the competition, how you got to the table, and give us some insights around what's happening at the Bank of Canada.
So the Bank of Canada is reaching out to us and over 20 other universities across North America to participate in this challenge. And they, like all the other central banks around the world, are looking at the possibility of introducing a government-issued cryptocurrency. And so there was a competition with several rounds of selection, and we were one of the 3 universities to be selected for this. So where I worked together with KJ Choi from the business school and 3 colleagues from the computer science department. And this was a really great collaboration, interdisciplinary work to come up with a proposal of what we think a Canadian cryptocurrency should look like. I think the Bank of Canada is doing a really great job here at talking to the universities to get different perspectives. I think it's important to have different thoughts here and different ideas. And academics like to think a little bit outside of the box to come up here with a really good system in the end. So it was really interesting to be part of this competition. And our report just came out a few days ago. And so it's now officially out there on the web. And this has huge potential. Every central bank, every country around the world is looking into this. The Chinese are pretty far ahead. They have started massive trials of central bank digital currency with the population, and they are probably the ones that move first on this. But every country at some point in time will come up with this. And this is great for many reasons. So at the moment, we have these stable coins that are issued by private companies, but we very often don't really know how trustworthy they are. So they say, well, for every token that we issue that represents a US dollar, we also have one real US dollar in a bank account somewhere. Okay.
I trust you.
I trust you, right? But is this really true, right? So, I mean, if a bank says that, we know that banks are audited by auditors, they are audited by the government. We can trust banks, and still sometimes even banks fail. But for the most part, those are pretty trustworthy. There's a bunch of regulation and security and safety net around that. But these companies, we just have to take their word for it. And so it's not very often not clear whether this is true or not.
This is what's fascinating to me. I mean, central banking was invented because free banking doesn't work. So you're literally going in talking to central bankers who say these type of systems are highly unstable, prone to bank runs. severe liquidity crises. How are they handling that? Like,
sorry, which type of systems are the new crypto systems?
Yeah, the new
or the
crypto
old
systems,
Okay,
like a fractional economy or fractional banking. I mean, central banks stepped in because they literally said those things don't work.
And in most countries, that kind of, if you go way back in time, the bank notes were issued by banks.
Mm-hmm.
Private banks issued notes, were slips of papers that said, "Oh, trust us, this is worth $1." And sometimes this worked, but as you mentioned, this created all these huge crises and problems. And so I think this will fail again. And this is a huge concern. So I can understand that the central banks want to come in here. And I think this will be highly appreciated if we have these tokens being issued by an entity that we all trust in, where we can make sure that, yes, this is backed by the Canadian government and by the Bank of Canada. And this is a trustworthy token where we know that this has some value to it, the same way we trust the Canadian dollar. Instead of a private company issuing a token where there might or might not be enough backing there. So I think this offers great possibilities. We do see that cash is in decline in general. Many businesses, I was in Denmark before the pandemic, give a talk at the university, and when I walked around, a lot of coffee shops or shops would not accept cash anymore. They would just take electronic payments.
Well, and COVID boosting our tap limits has been, one of the unintended consequences. It was a bonus from my perspective.
Right. I think that cash is at some point in time going away, and you have to be ready for that. But in our proposal, I think what we try to emphasize is that you could do so much more with this technology. You can really build the same way we use the smart contracts on an Ethereum platform today. You can use the same kind of smart contracts on a central bank digital currency platform. So we can settle trades in stocks with smart contracts, and we don't have to go through a cumbersome process as we have today. So when you buy a house, for example, today you have to deposit your money with a lawyer, holds this in escrow, it's a certified check, it's complicated. Doesn't happen very often, but occasionally the lawyer runs away with the money.
Yeah, it goes into their personal trust. Yeah.
Yeah. And so you can all automate this with central bank digital currency, and you can run this on a platform where you can give your cryptocurrency to a smart contract. The smart contract talks to the land registry. Once the title gets transferred, the money gets paid. At the same time, you can take out the new mortgage, repay the old mortgage, that. So it could all be automated, and this could create a lot of benefit for everyday Canadians, but also for the whole economy. It could simplify a lot of processes that we do today that are cumbersome and require a lot of back office work. This could be structured in a much more efficient way in a smart contract platform. And what you need for this is a kind of medium of payment. So you can build all these smart contracts. In the end, what you want is you want to pay real people in real money. Mm-hmm. And so that's a little bit the part that's missing today in this whole ecosystem, that we don't have any efficient way or a good way to pay people with real dollars. So this is where the central bank digital currency could come in and fill that gap. And this could really boost the whole system and cause a lot of disruption and improvement in efficiency.
In our warm-up call, Alfred, you had mentioned, though, that the approach that you guys took at the UFC, at Haskane, and the collaboration was different than the other players in that you didn't want to see the central bank have all of the power, and that the necessity for the other, the big six banks that are in Canada from a distribution perspective. Can you help us understand your thinking around that component? Because I thought it was quite fascinating.
A lot of the central bank digital currency proposals that exist today see this as more or less an electronic version of cash. Now, if everybody in Canada would hold all their savings in cash dollars, this would be very bad for the economy, because we need to deposit the money with the banks, and then the banks give out loans to companies. Those companies create jobs, they keep the economy going. So it's really important that we don't freeze out the bank banks from this system. In our proposal, a very important point is to include the commercial banks in this CBDC proposal, that there's a seamless transition, that you can always deposit your central bank digital currency in a commercial bank, the same way we go to the bank branch today and deposit $100 bill into our checking account. We think this is a really important step to preserve in this new digital world, because the banks need the deposits to give out loans to sustain the economy. If everybody would just hold their money directly with the central bank, that would be very safe, but it would cripple our economy. And that is not a very good thing to do.
I always find myself going to the bank to take out money, not to put the $100 back in.
And somebody has to put in the money that you take out.
But that's the critical point, isn't it? Is that it isn't a debit card. That's the way the governments would want to look at it. But it really is that the smart contract becomes a borrowing and investing vehicle and a store of wealth. And if someone could back that, then it really transforms things. That's what the most fascinating part is here, because currently the trustworthiness of that store of wealth is up in the air. But for the economy to work off this type of platform, it has to become a borrowing investing vehicle. And that's what these new exchanges are just fascinating to me about.
Yeah, we definitely need some kind of government involvement here to, first of all, coordinate a little bit these kind of smart contracts, so that in our proposal, we emphasize that ideally this would run on every bank, that you could deploy the same smart contract to do a certain thing for you on whether your money sits with bank A or bank B. This is how you can generate these efficiencies. And you also need the trust in the Bank of Canada, so that people can really be confident in using that, and that we have this means of settling these financial claims in a trusted and efficient way.
Yeah, it takes out so much of the frictional cost when you think of it.
Yes.
With the providers right now that are saying that they've got $1 in reserve, there's an amount of trust there. So I think we have high trust in the technology and the crypto and the smart contract. But what I'm hearing you saying is that we need to have a government step in to make this become mainstream part of the economy. I'm interested, though, it beckons, what is the regulatory environment with these private systems right now? Are they regulated? Is it kind of the Wild West? How does that whole financial market system that's in the crypto or in the blockchain smart contract world work from a regulatory perspective?
So this is the total Wild West out there for the most part. So this is really, there's no rules whatsoever. If you're not careful, you get robbed. If you read about, it's interesting to follow these discussions on Reddit. So if somebody exploits a weakness in a smart contract and kind of takes $10 million out of that, some people say, well, that's bad. This was a hacker. That isn't a bad thing. And the other people you hear saying, well, it was stupid for them to write such a piece of code that doesn't work. So they did the right thing. It's in a way a really wild system out there. We see that some entities that operate in this space are seeking regulation. They want more regulation. They want to subject themselves to regulation because this increases trust in the system. They've understood that, but there's a lot of players that also in that space that don't like regulation, that don't care about it. And so this is, of course, a concern. I think this whole privately issued money is a bit of a problem because one close example in the existing financial world to this are money market funds. They also take your money, give you these certificates for it, and invest your money in short-term assets. And they are regulated, they are run by professional companies, but we still saw that some of these money market funds broke in the financial crisis. Mm-hmm. And the US government stepped in and bailed them out. And so even if companies try to do this properly, I think there is an inherent weakness in this idea of privately issued money. And that's why eventually this went away. Before this recent episode, we didn't really have a lot of countries where private money was issued. And so I think that eventually the government has to come in and issue a government cryptocurrency that we can use.
But the attraction, to your point, Alfred, of this whole system is what the one party is saying there: if you're stupid, you pay. Whereas the current system, unfortunately, because of regulation and political interests, the collateralized debt was stupid and it got bailed out by the taxpayers. And this is the whole issue. Has Bernanke opened the Pandora's box where if you're stupid and have an asset that doesn't pay, it used to be taken behind the woodshed and you got shot. Now, if an asset fails, the government keeps bailing out what would be stupidity. So the market never clears. So there is an argument to both of these sides of the equation.
Definitely, that's true. I mean, I totally agree with you that this creative destruction that is so important to capitalism has been absent in many ways because the government bails out certain segments of the economy based on political pressure.
Mm-hmm. That's not capitalism anymore.
I think that's not capitalism anymore. So capitalism needs this creative distraction where, if to some degree, if you're stupid, you have to go bankrupt. Yeah, and that's good because it eliminates a lot of. We learned that certain things don't work. It creates discipline in the market, and that's what capitalism is about. And too much intervention here, bailing out failing technologies, bailing out failing business models, it's distorting the market, and that's not always good.
Fascinating. Well, Alfred, unfortunately, our time's up. I'm sure we could spend the next couple of hours in deep discussion. It's just such a treat for us to have someone of your caliber with such a depth of knowledge in this area that's new and up and coming. A couple of takeaways for me that were really important from your message is, oh my gosh, like, hang on to the guardrails. This is happening fast. A year ago, 18 months ago, there wasn't markets out there, and crypto markets are here. They're trading in the billions of dollars, and DeFi is going to change how things work no matter what goes on in the world. The second takeaway for me was just really nice insight. Like at SmartBe, we talk about academic rigor and we talk about transparency and the ecosystem seeking truth. You really brought that to sort of ground zero for me today in, the conversation about having to go to the dean for a computer that's way more expensive than anybody could have ever dreamed, and just the amount of data that's out there for you to do the type of analysis that provides that rigor that your peers can look at and get published in the big journals. So thank you for that takeaway. And the last piece for me was the Wild West trust regulatory. This has to move into the trajectory to me says that this has to move into the mainstream. And it may not be in 6 months, it may not be in a year or two, but the fact that there is so much friction in some of our existing institutions and infrastructure, to me, really means that there is going to be disruption in a whole brave new way of doing things. So thank you so much, Alfred. This is Modern Investor Journey. My name's Rod Hurd. I've been with my co-founder and partner, Art Johnson. We've been talking with Dr. Alfred Lahar, who's Associate Professor in Finance at the Haskayne School. Thanks so much, Alfred. We've really enjoyed our tape.
Thank you so much. This is really great. And you're really doing great work at SmartBe. So it's really a great pleasure to be on this podcast. Thank you.
Thank you, Alfred. It's lovely to have this intersection between the academics and the real investors that we're trying to build and get the work of people like you out into the mainstream rather than, and really help investors to bridge that kind of knowledge that there is this deep body of research, as Rod said, that is actually looking to answer the same questions that average people are asking, and not just the narratives they would hear from a financial intermediary, that there's some real value in that. So this is wonderful having you on.
The information contained in this podcast is 1, for Canadian residents only, 2, for informational purposes only, and 3, not intended to be, nor shall it be interpreted as, a recommendation or the provision of advice, including without limitation financial, investing, sales, marketing, legal, accounting, or tax advice, and shall not be relied upon by you in that regard. SmartBe Wealth Inc. cannot guarantee the accuracy of any information contained in this podcast that is derived from third-party sources, although we believe those sources to be reliable. SmartBe Wealth Inc. and its affiliates may receive compensation derived from investments in or sales of its products or both. SmartBe Wealth Inc.'s products described in this podcast may not be applicable or available with respect to all investors and may change without notice. Past performance does not guarantee future comparable results. Exchange-traded funds, ETFs, are not guaranteed. Their values change frequently and past performance may not be repeated. Investors will pay management fees and expenses, but they will not pay commissions or trailing commissions, and they may experience a gain or loss from their investment in or sale of an ETF. You may request a prospectus for an ETF from your financial advisor by visiting smartbewealth.com or by calling SmartBe Wealth Inc. at 403-930-8693. The prospectus includes investment objectives, risks, fees, expenses, and other information that you should consider carefully before investing. Please consult a lawyer or tax professional regarding your specific legal or tax situation, respectively.